Welcome everybody to PUP's office hours. It is May 25th. We are in full on bear market territory. Where do we go from here? So that's what we're going to be talking about. I run these office hours every 2 weeks on Wednesdays at 7 Eastern Standard. Generally keep it mostly for my members, but sometimes I do invite some outsiders to get a peek behind the curtain, see what we do back here. So let's just dive into the next slide real quick. Again, I'm Danny Naz. Find me on Twitter, Instagram, YouTube, at the Pup of Wall Street. This is, like I said, my office hours. We're going to run about 75 minutes, maybe upwards of 90 minutes, depending on how the session goes. We're going to review the overall market. We're going to go through charts. We're going to go through a little bit of process, hunting for trade ideas. I'm going to show you my watch list. Maybe we'll set some alerts and some other things as well. After I go through all the charts, we'll do a little Q&A. Well, first we'll do a chart request, and then we'll do a Q&A session. And yeah, that should be it. So really quickly, I use TrendSpider to do all of my charting. When it comes to dark pool data and dark pool data and options flow, I use black box stocks, and then I use Tradie Ticks for more of the algorithmic type of trading. So really quick, for those of you who are not members, I run an educational platform. I send out daily emails every single morning, give you updates on the market, pre-market activity, news events, economic calendar, and you know, if there's any earnings for that day. I have a top 10 long-term conviction stock list. I share all of my TrendSpider scans and watch lists, my trading rules and documents. I do chart requests in our platform. And like I said, I run this office hours every 2 weeks. And I do a weekend video. And lately I've been doing more videos throughout the week. And I'm going to continue to do that. I know a lot of the members have pinged me and said it's very helpful. And so I'll continue to do that. Sometimes I do a trade breakdown video, and other times I'm just doing like a midweek video like I did yesterday, top 10 charts I'm looking at for this week into next. So that's 79 a quarter, 275 for the year. It's very affordable, one really good trade, and you're making, you know, 2 years of membership. And then I have the executive plan, which includes a little bit more one-on-one. So enough of that. Let's get into the charts. Bear with me 1 second while I get that screen up. One second. It's always technical difficulties with Zoom. Here we go. Okay, can I get in the chat, just let me know if you can see my screen here with the chart up. Perfect, thank you, Josh. All right, so let's start at the top. Let's talk a little bit about the indices. So obviously, no surprises here. We are in a bear market. Technically speaking, it's a drawdown of 20% from the top. We hit basically 20% on that anchored VWAP tap. Not sure why it's not showing up, but let me grab that real quick. Bear with me. So we'll go down to the low right here. We'll drop an anchored VWAP right there. And you could see we came basically right into, we wicked right into that anchored VWAP, that COVID low anchored VWAP. We saw a nice reversal off of 380. For those of you who have been with me for a while, I've been talking about this level for months. You know, as soon as we basically started this decline, and I recognized we were kind of like in an ABC retracement, you know, I figured C wave is going to be somewhere down here. C wave can tend to be in a like a 5-wave move. Let me grab my little tool here. And so you could see wave 1, 2, 3, 4, 5. Usually it happens, corrections happen in an ABC manner. It's exactly what we're seeing here. So no surprises, but now it gets a little more difficult, okay? Because some people might say, you know, the bottom is in. I don't think the bottom is in, unfortunately. I feel like nothing has changed from an economic standpoint, from a macro standpoint. There's still a war in Ukraine. Oil prices are still high. Gas prices are still high. There's still supply chain issues. There's still COVID with shutdowns in China, which is also affecting supply chain. Inflation. Everything is much more expensive today than it was a year ago. I'm sure everybody feels that pain. And so when you have all of these economic headwinds, it's hard for me to see any kind of substantial recovery in the near future. So that's the bad news, right? It doesn't look pretty. This could last possibly for the rest of the year. I think most bear markets, I think on average, they last about 9 months. And, even though technically we just entered into a bear market, if you would say, even if we would say we've been in a bear market for 2 months, that still could leave a potential of 7 more months of bear market territory. So, and we also are not officially in recession, although I think some people would beg to differ. And, that's probably, officially going to be called pretty soon. So, it doesn't look great from the economy side, but there are always going to be opportunities, whether it's in a regular trending market, bull market, or in a bear market. There's always going to be opportunities to trade stocks to the upside. And basically that's what I do. I look for the relative strength in the market. I try and identify it, share it with you all, come up with a trade plan. And that's what we'll talk about in a little bit. So right now, we're 5 days green, but look at the wicks. Like, let's zoom in real quick. Look at the volatility that we're seeing in this price action. I think, only yesterday was kind of a better day in terms of a close, but, spinning top, and basically spinning top is you get a long wick on the top, long wick on the bottom, and a small to medium sized body. So you got another spinning top there on it was this Thursday, Friday, Monday, Tuesday, not bad. And then today, another kind of spinning top candle. So the market is trying to bounce, but the problem is sellers are stepping in and they're selling every single time the market bounces. And so to me, it's screaming for us to want to go lower. And then, if you anchor, let me look for my volume by price tool here. I'm going to anchor this to the all-time high. That's going to give us an indication of where our supply is. And so you could see, we're still bouncing at a little bit of supply here, but once we come up to the 415, if we could even get there, the 415 to 420 area, look at all of the supply up here. Think about all the people that bought up here. What are they doing? They're bag holding down here. So what happens from a psychological standpoint is when you get these rallies back up, the people who were bag holding up here, if they're weak-handed, they're going to sell into you, which causes the market to go right back down. And so even though I think we might see a little bit more rally, I think for now, the best we could hope for is a push to 405 on SPY. If we could break over 405, then we do have some room, possibly to 415, but I think the buck stops there. I think if we're going to rally, we rally there, and that might be the next leg down. So, the important thing is to not have a bias in this market. Don't think that the bottom is in. Don't think that that this is the top, because I could tell you right now, you don't know. I don't know. Some of the best traders out there, they just don't know. We're an economic event around the corner from pushing this market all the way down. So just be mindful of that. Same thing with the Qs. Tech has been definitely a bit weaker than the regular, than the general market. Tech stocks have been hammered. Growth stocks absolutely have been hammered. This, one thing I look at, you could see we already had lost the COVID low back in early May. And now we're coming down to the December 2018 low anchored VWAP and bouncing from there. So I had put these 2 target zones out about 2 months ago. Again, 5-wave move down, wave 1, 2, 3, 4, 5. Very clear 5-wave move into my second target zone. It also was the 1618 extension of my wave B. So everything jived with us having a little bit of a bounce right here. And so far, very tepid bounce, very weak. And so we have to just be cautious here. Until we see a multi-day market rally, you know, the thesis is that we're going to continue to go down. Now, keep in mind, we can see these bear market rallies, you know, where you could have multiple days, if not weeks, with upward price action with small pullbacks. And so that's also not a reason to get sucked back into the market, right? Because I think I asked a couple of people how long you've been trading. You know, I think Matthew said 6 years. A couple of other people said 1-2 years. So this is your first bear market, right? And I tell people, I do a lot of Twitter spaces, and I always say, you know, for those of you who are popping in, pay attention, because you're going to see this multiple times throughout your life. You know, some of the traders that have been trading for 20 plus years, they've only seen maybe 4 or 5 bear markets. And, you know, the more you see it, it's like muscle memory. You know, always equate it to like to baseball. And if you're a batter, the more times you see the same pitcher, the more comfortable you're going to be with his style of pitching, and the more chances you're going to have to get a base hit or a double or a triple or a home run. It's the same thing with trading. You know, the more you look at your charts, the more you understand the personality of how that chart trades, the better opportunities you're going to have the longer you do this. So for those of you who've been doing this for a couple of years, you know, you're in the embryonic stage of your trading journey. You know, once you hit like 5-7 years, you're out of that crawling infant stage, and you're starting to grow up. And then once you hit the like 10 plus years, you know, now you're starting to have a lot of muscle memory in this market, and you've seen multiple cycles, you know, multiple types of markets in multiple cycles. So that's what it's really important, that for those of you who are showing up today and who are watching this recording, you know, really important just to stick with it. The market's not going anywhere. Everything goes through cycles, and it's important to understand what the cycles look like and how to trade through them. All right, so let's take a quick look at IWM. You know, small caps also very weak. I would say my line in the sand is 164.31. We fall below that, and I think it bodes really badly for the market. I would say 150 to the downside. VIX got a little elevated a couple of weeks ago. It's still, you know, still fairly elevated, but it's not like, you know, in the 30 to 40 ranges. A lot of traders out there that feel like we're going to get some kind of elevated VIX spike in the coming weeks and months. We could, and that's certainly going to push the market further down, but we'll have to wait. Generally, they happen with news events. You know, the war in Ukraine, I believe, this was around this time right here. So yeah, I mean, right now, still an elevated VIX. You could see from the COVID high, that's how high the VIX was right here. And then since COVID, it's just been steadily dropping with these little spikes that we've been seeing. So yeah, just have to keep an eye out when the VIX spikes. That's when you got to be careful and just monitor your positions. All right, let's take a look at some indices here, some ETFs. This is XLE. This is the energy sector ETF. This is your ExxonMobil. It's mostly comprised of ExxonMobil, Chevron, and Conoco Phillips. And we'll talk about, I believe, COP, Conoco Phillips, in a little bit. That was a trade idea that I put out, I believe, on Monday. So yeah, I mean, you could see energy consolidated for a little bit, you know, for a couple of months, and now we're starting to break out again. So energy is looking really, really strong here. For those of you who drive and have home heating oil, you know, I'm sure you're feeling the pain in the pocket, right? Gas prices are, well, I could say here in New York, they're in the $5 to $5.50 range. I know on the West Coast in California, they're probably in the $6 range. So yeah, gas prices are high, and that doesn't really bode well for the economy going into a summer driving season. So yeah, rain is 5:45 in Arizona. So yeah, I mean, we're all feeling it in the pocket. So energy is breaking out again. So this is a good opportunity to look at some energy names, and we'll take a look at a couple coming up. Excuse me. So utilities is another one. Don't think I have a chart on them. I guess I don't have I know I do have a list. Oh, I'm on the, let me see if I can go up to the weekly. Maybe it's up there. There it goes. Let me put that on the all time frames. I don't know where that went. It doesn't want to show up on the daily chart. All right, let's go up to the weekly just so we could see it. So yeah, I mean, when we're talking about utilities, I mentioned this on the last office hours, that look at the moves, the measured moves that utilities have been making, right? 10% drawdown here, apologies, 10% drawdown here, 7.5% there, 9.5% there. 10.5% there. So let's take a look at what this drawdown looked like. And could we have figured out where the bottom was? Well, yeah, because this drawdown was 9.5%. And if you take the median of these moves here, it's probably around 10%. Not only that, it's also the 618 retrace from this trend line right here, from that swing low to that swing high. So yeah, utilities definitely look like they're ready to bounce. And look what happened every time they bounced. This instance, it went up 15%. This instance, it went up 10%. In this instance, it went up 11%. So let's say the median again is 10%. You know, maybe over the next month to 6 weeks, we could see, you know, possibly utilities going up to about $78. And so what I would look at is some of these names here: NEE, DUK, SOD, any of those names. You know, XEL actually, we could take a look at that. It's not on my list. Excuse me. I don't know why it's on my list. It's not on my list, but I'll put that on the list. Let's just put it on the list real quick, because I know that's a stock that I really like the setup on. That's another energy. I think they're energy utility. So yeah, I mean, utilities is definitely something that's starting to bounce bigger than the rest of the market outside of energy. And so it's something that we should keep, certainly keep an eye on. And then the other thing I want to keep an eye on from a technical perspective, but also from a fundamental perspective is clean energy. So TAN is our solar ETF, you know, EMPH, SEDG, RUN, FSLR, but also iClean. I didn't have it on the list to go over, but ICLN is also another one that you want to keep an eye on. If energy prices continue to stay elevated, and I do feel like they will, there's going to be a bigger push into clean energy. And so those would, you know, be some of the names that I would keep an eye on, you know, at least for the rest of this year. All right. So yeah, they've been consolidating, you know, they're not showing too much relative strength now, but I'm just thinking about it from a more fundamental standpoint that you might start to see buyers step into some of these names. And I'll certainly alert you as I'm seeing, you know, ideal chart setups in some of these names. So yeah, that's pretty much what we got from the ETF and sector side. So let's start going into some individual names. Let's go back down to the daily chart. And some of these I've already put trade ideas out on. For those of you who are new, this is basically what the trade idea will look like when I send them out. It'll be the date. I might have a little note with it. It'll show you what the entry, the targets, and the stop loss are going to be. All right. So with ADM, which is Archer's Daniel Midland, you could see we had a nice break over our initial target down here, our initial trigger, 78.05, and a really beautiful move. We hit 3 price targets to the upside, and now we've been retracing. We retraced right back to that swing low anchored VWAP, right at our 200% extension right here. And now we're coming right up to that 2618, right under the 50 SMA. So this might be a great place to add to this position if you're still in, or to get in if you're not. Over 88.94, ADM does look pretty good, and these would be the targets to the upside. Next up is Antero Resources. So this has been a really, really good trade for this year. You could see I put an anchored VWAP to the swing low, and it comes right down here. But then I put another one here to another prior swing low, it comes right up here, and then another swing low. And you can see how that anchored VWAP acted as support. And now we're starting to break out again, starting yesterday. And so, yeah, it looks really, really good. It looks like we might have wave 5 activity here. So this potentially could be the end of a wave here. This looks pretty impulsive, wave 1, 2, possibly wave 3 here with an ABC correction, right? This could be our wave 4, and then wave 5, I would probably target somewhere in the 46, maybe upwards of $50 range. So it does look like Antero Resources has a little more juice, a little more gas in its tank. So keep a close eye. I mean, it's made a pretty big move off the last 3 days, and also caught this beautiful hidden bullish divergence. So for those of you who don't know, when RSI makes a low and then another low, or a lower low, and then another lower low, and price is making a high, a higher low, and a higher low, it's price is diverging from relative strength. And so as relative strength is dropping, price is going up. That's bullish, and it's what's called hidden bullish divergence. It's different than regular divergence. So yeah, AR looking pretty good here. This is a new one. I haven't talked about this one yet. Showed up on my scanners today. Big move here on AVD. If we go up to a weekly chart, you can see we're coming into a multi-year high. You could see $24 acted as resistance in 2017 and also in 2018. We're breaking through that. So that's a multi-year breakout that we're seeing that just happened today. So this is something that we should absolutely keep on our radar, because if you zoom back even further, all-time highs are around $37. Now, I know nothing about this stock. I literally just found it 2 hours ago, 3 hours ago. So, you know, do your own due diligence on who they are and what they do. But from a technical point of view, this looks really, really good. These would be my intermediate price targets for the next probably few months. Next up is BMY. This is Bristol Myers Squibb. This just looked like a fantastic setup. It's not, you know, one of the high flyers. It's not going to move very fast, but beautiful wave structure, nice consolidation in wave 4, very clear for me. Entry here at 77.50. Should push that up a little bit. There we go. Over these highs, you did have a false breakout back here, and it quickly failed with a bearish engulfing candle. And so the other thing I love is look at how RSI is holding up here, right? You get that 50 pullback right there, get another 50 pullback right there, another 50 pullback right there, and price is consolidating while the TTM squeeze is setting up in a slingshot squeeze. So again, for those of you who don't know, slingshot squeeze, basically you have negative momentum that shifts up to the 0 line and then starts to go positive. At some point, this is going to fire. And when it fires up, price is going to accelerate up. Doesn't always fire very hard, but you know, we could probably look at some examples. Here's one that squeezed to the downside, and look at when it fired, how it squeezed to the downside there. So yeah, I mean, this one, you got to be patient with it. I can't say it's going to break out tomorrow or next week or even next month, but keep an eye on 77.51 on BMY. Next up is CCJ. This is Cameco Corporation. They are a uranium play. So this is kind of more in the nuclear energy kind of world. And so what I noticed is we are back over the 200 simple moving average. And, you know, I do like this from a risk to reward standpoint. I did put out a trade idea on the 16th, a couple of weeks ago, over 22.86. We have taken that entry and the targets. I would say we could probably take this up to about 27.69, that 618 retracement. I think that would be where you have to start being careful. Even before that, I would watch that 50 simple moving average in blue. But you could see it's got nice bounces off these trend lines. And so that's what I'm looking for a similar kind of move off that trend line there. And there's your risk to reward, 3-to-1 risk to reward back up to the highs and then up to the 618. It's about a 1.5 to 1 risk to reward. Here's another one that popped up on my radar today, CELH, Celsius Holdings. I believe it's an energy drink company. Yeah, we could see we're consolidating in this range between 41 and 62. So it's a pretty big range, but we're coming up to that top at 65.19, and we have the 200 simple moving average up above. I think if we break 65.19, you can take an early entry. Just be careful over that 200. Got to get over the 200. If you can get over the 200, it's got free reign to move a lot higher. So keep a close eye on CELH. Here's COP. This is Conoco Phillips. I talked about this at the top of the talk today. This is part of the XLE ETF. And you could see trade idea went out this week. I believe that was Monday, over 107.90. It broke out on Monday. Tuesday continuation, Wednesday continuation. We already hit that 1272 extension. 116 would be my next target to the upside, but it looks pretty good. Another one that has been a little frustrating is FANG. I put out a trade idea out in March over 139.08. We broke out initially and then we failed, came back all the way down. And now we're back through that trigger. I would say if we're going to revise the trigger, it's probably over 145 at this point. mean, you certainly could take an early entry here or off a back test of 139. Make sure you use like that, maybe that 50 simple moving average as a stop loss. But I think until we get through 145, this is going to continue to chop in a range. You can see TTM squeeze fired today to the upside. So we might get a little bit of a push. Just keep a close eye on FANG. Next up is INSW. This is the first of my shipper names. It's a shipping company. And these names have been doing really, really well for the last couple of months. We'll look at two more in a little while, ZIM and STNG, but there's others. There's EGLE and BLK, I believe, is another one, or SBLK. So a lot of these shippers are doing really, really well. You can see a beautiful move off of the low here back in January. So I had put a trigger over 2280. That was a prior high from back here. We broke that, and nice acceleration to our first target at 2493. So we've already hit the first one there. You can see we wicked up to that twice. If we can get over 2493, then 2817 would be my next target to the upside. Another sector we should keep a close eye on is the defensive sector. So this would be your Lockheed Martins, your Raytheons, Boeing, and I always forget the other one. Man, it doesn't matter. It's not on my chart. But this one looks actually pretty good from a technical standpoint. You could see we're already breaking the 50 simple moving average and the prior swing high anchored VWAP. So I'll probably put a trade idea out on this tomorrow for an entry over 449.22. Our earnings aren't until July, so we've got plenty of time there. And I would say watch into 467 into the top of this wedge and the 200% extension up here. I think that could be a pretty decent trade. NOC was the other one, Northrop Grumman. All right, Microsoft. Yeah, so I really haven't spoken too much about tech in quite some time. But what I did notice on Microsoft today, I've been watching this 263 level, and it showed up on my scans today. I did get an alert that we were back to 263. So we wicked through there today. I would watch Microsoft over 263. If we can break and hold over 263, this could be a trade opportunity. I would say, where could we take it? I would say, possibly 273, 281, maybe 289. Keep in mind, this is all sector and market dependent, right? If the market continues to go down, everybody's going to get affected for the most part. So certainly Microsoft will. But if the market starts to rebound, if we get this mini bear rally, I believe Microsoft would be one of the ones I would say to watch. Tesla is probably another one that I would keep an eye on. And as we see some rotation, if let's say I see a bear market rally happening, which I think we're pretty close to having a decent one. Don't know when that's going to be, but I'm certainly keeping my eyes peeled for it. My trading strategy is going to change a little bit. I'm going to probably look for shorter swings, but in more of the familiar names that we all know. So Rain is saying, but doesn't that look like a bear flag forming? Yeah, absolutely. Bear flags can look, and yeah, it absolutely could look like a head and shoulders, but that's the funny thing with bear markets, right? We can rally right up to that 50 simple moving average and come down. So long as your trade plan is from 262 to 273 and then potentially to 281, that's only a 7% move. In a bear market rally, you could see a 7% move on some of these names in a day, right? And so the idea is not to say go long here on Microsoft, but if you want to capture, some of the rally to the upside, I think there's opportunity there, certainly for names that are showing a little bit more relative strength than others. But yeah, I mean, this certainly could look like a bear flag, but it also could just be a bull flag, right? It could actually break out and then start to move. So it's almost like it's kind of guilty until proven innocent. It is what it looks like until it doesn't. So we have to always have that bifocal lens, so to speak, and not have so much bias in the patterns that are forming until they actually prove themselves to be what they are. Next is NFE. Oops, didn't mean to do that. What did I just do? I just moved my target zone. Bear with me. There we go. So yeah, this one looks pretty good. New Fortress Energy, another energy play, symmetrical wedge. Put this one out on I believe Monday. No, yesterday. The break of 44.57. We got that breakout today, and guess where we stopped? Right at the top of the wedge. So I want to see continuation through this. I want to see continuation over the wedge tomorrow and into the next day, into Friday, because we do have a beautiful, range that we're holding here on RSI, right? Holding over 50, and we also have a squeeze setting up. So I really like these types of setups when you have a beautiful bearish, bullish consolidative pattern with some of my other technical indicators that are showing us to also be bullish. So this one looks pretty good. Keep a close eye on it. It did trigger today. Next up is Oxy. This has been a really nice trade this year. Initial entry was over 35.87. That was only a short trade for me. I got out prematurely, and then we started to consolidate in this kind of wave 4 triangle. And so I put out another trigger over 61.70, and we did break out, and then we quickly failed. And so I stopped out of that initial trade. But also you can take it back through the trigger again. So took a second attempt here at 61.70. OXY looking pretty good. Squeeze momentum is starting to wane a little bit, so I want to be careful. And if you're not in, we still are, maybe we have another $10 move to the upside. So you have to kind of keep your, your time horizon in mind when taking any of these trades. But I do feel like we're going to hit this target zone, maybe in the next 4 to 6 weeks, depending on what energy does. Here's another one, SBOW. Put this trade idea out a couple of weeks ago. We actually broke out today, right through the swing high anchored VWAP, right over my trigger, and we came very close to our first target at 38.27. So it's, watch these levels that I put out for breakouts. A lot of the times, these first day breakouts, you get really nice push, right? SBOW was up 6.3% today, so that's a pretty nice one. But also look, right? You had descending trend line here. You had a breakout. It broke out for like 3 weeks, and then it retraced and retested the breakout 3 weeks later. So, sometimes if you miss that initial entry, don't chase it, right? You could wait for the pullback, and this is a beautiful throwback retest right there. And we also had a squeeze set up that looked like it wanted to fire to the downside and quickly shifted back to the upside. That does happen. And now you can see we're breaking out over RSI on 50. So really nice setup here on SBOW. Here's one of my favorite trades for the last couple of months. Fantastic find here. Big shout out to Pattern Profits, Ben Bennett. He puts out a relative strength scan, I think every day or every other day. And I saw this name, I looked it up, it looked like a beautiful setup, and then put out a trade plan over 1946. Again, breakout, back test, bounce. And this one, man, has it bounced. So I wish I would have put out a second entry. There was only one entry on this. It just went so fast. And now we're coming up to our 1618 extension, which is probably going to be my final target for this particular trade. Not to say close out the trade here, but certainly start to tighten up your stop losses. We're getting into overbought territory. TTM squeeze is starting to wane. It looks great. It can continue, but you've got to be careful coming into the 1618 extension. So just keep that in mind. I have a couple of more names to go through, but if you have any chart requests or any questions, drop them in the chat now. So by the time I get to that portion of our talk, I will be able to just go right into that section. So bear with me 1 second. Okay. So SWN, SWN, Southwest Energy Company. I mean, you see a theme here: energy, 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 shipping, energy, energy. Okay. So we got to go where the relative strength is. So beautiful breakout on Monday, nice continuation Tuesday, and then a massive push today. So watching this up to 876. It's probably not going to break out its first attempt. It'll probably chop around for a little bit. Over 876, you could target 939 and 1024 to the upside. Here's a new one that I put out last week. This is Tallow Energy. Shocker, another energy name. I initially had this trade alert at 1873. We broke out and then we failed. So I revised the trade alert to go over 2039. Well, guess what? We hit it Monday and Tuesday, and yesterday blasted through right to our first target, 2196. Next target's 2310, 2582 to the upside. Here's that XEL that I added at the last minute. Don't know why I didn't add it to begin with, but another energy name, XL Energy. You can see 1, 2. I have this wave 3 coming up to $82. We're well on our way there. Beautiful slingshot squeeze fired off today. This is on its way. So keep a close eye on XEL. And last but not least, our last shipper of the day and last chart of my chart review section. This is ZIM Energy. ZIM Energy. What am I saying? This is ZIM Shipping. Just so used to talking about energy names at this point. So first entry was at 3.6 over 74. 74.59. That was this trade right here. And then we had earnings, and I believe they did a dividend, $17 dividend, which sent it back down here. It did continue right back down to the 200 simple moving average. And then we started to bounce. Right at this bounce right here, I started to get reinterested. And I was watching 63.20. Which I believe was this high right here. And yeah, I mean, ever since we broke back through that on the 19th, I put that alert out, I believe, on the 20th. No, that was on the 5-4. So apologies. That was right back here. So we had broke out. We failed the initial breakout. We back tested the 200. We broke out again, failed that breakout again, and now we're pushing back over these previous highs. So over 69.56, it does look pretty good. I would watch 74, 67, and then 81.95, and then potentially back to these highs at 91.23 end time. So that wraps up the names that I was going to go over. I plan to go over. Happy to take some chart requests at the moment. Bear with me while I grab a little sip of water, and I'll wait for those chart requests and questions to come in. All right, so Alfonso's asking for Verizon. That's ticker VZ. All right, so let's do this. Let's go up to the weekly chart first. And yeah, it looks like Verizon really has just been trading within a range. You could see its top end of the range, 62.29, bottom end of the range, right around 45.96. So, you know, not bad, not a bad attempt if you were to grab it down in that $46 range for a bounce. It's just not something that, you know, I know that I think they could do a dividend. So, you know, maybe from that perspective, I think it's pretty good, but it's just not a name that gets me excited to wake up in the morning personally. But what I would say from a technical standpoint, watch for a break over this trend line. You obviously have a declining 50 simple moving average. You have a declining 200 simple moving average. Let's go back to the daily. We just broke through the 50 on the daily. So yeah, I think today this looks pretty good for a trade. Up to the 200, but you got to be careful once you get to that 200. I guess they had bad earnings on the 22nd, sold off on earnings, and now we're bouncing back higher. So next earnings aren't until July, so plenty of time for there. You know, maybe you could see a move back up to 55.40 before the next earnings. Certainly possible. That's what I would watch for. AXP, I think what's that? American Express. Yeah, American Express. Yeah, I already had charted this one out. Yeah, it just looks like it's kind of flagging here. It's just in a channel. I did initially when I did chart this out, I think it was on the 18th last week, and I believe it was on Spaces. Someone had asked for this. So yeah, possible that you could see a move back up to the 200, back up to the 50, back up to the top of the channel. I personally don't like stocks that are under the 200 simple moving average on the daily chart. To me, they're just fundamentally broken and very uninteresting, because not only do you have to deal with supply up above, you got to deal with the moving averages up above. So, but yeah, I mean, you could certainly see beautiful move today. from a trade level perspective, I mean, you could watch 165, 171, 176 to the upside. CRM Salesforce beaten down. Let's go up to the weekly chart. All right, so when you look at long-term trend, we're losing that long-term trend line. Okay, so that's not great. Let me go up to a monthly, as I know this company has been around for a while. Take off earnings. Yeah, it's way too far. Yeah, I mean, I think that's not good. It's breaking its long-term trend line, right? We're talking from the 2011, 2012 lows. You had this wick tap. With wick tap, look at the 50 simple moving average, how it tracks that trend line. And now you're breaking the 50 and you're breaking the trend line. So I think from a longer term perspective, this is not great. I will say that, you know, software companies in general are definitely going to see a lot of challenges moving forward from competition, from no-code tools. There's definitely been a very big move to no-code type of products. So I think you just have to be careful. And you're looking at this from a bigger perspective. You have 1, 2, 3, 4, 5, 6, 7. Did I count that right? 7 straight red months. Where else have we seen 7 straight red months? So back here in 2008. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. 6. So this is the longest downturn in Salesforce history. From a percentage perspective, it's a 52% drawdown. That one's not as big. Let's see how big this drawdown in 2008 was. Pretty big. 75%, 74%. So be careful buying dips. Not even just on Salesforce, on anything. Dips can get dippier and dippier and dippier. And RSI is not even quite oversold on the monthly. It's probably oversold on the weekly. Yeah, we're oversold on the weekly. So you might get that counter trend rally bounce back to the top of the trend line, get a rejection off that, and then another leg lower. Let's take a look at CCL, it's Carnival Cruise Line. Yeah, it's another kind of tough market right now. Rising energy costs, COVID, people don't have as much money in their pocket. It's not good. Yeah, it's not great. Let me go up to a monthly chart. Yeah, it's kind of broken. I mean, maybe you saw like potential for a bounce at 1694, but this month is just really bad. And then you have bearish RSI. You've got a declining TTM squeeze. Yeah, it doesn't really look that great. We can take a peek at the daily chart. All of your moving averages are pointed down. You got to wait for these things to base. What I would suggest everybody look up is the stages of bases. You have stage 1 consolidation, stage 2 incline, stage 3 consolidation, stage 4 decline. A lot of charts are in a stage 4 decline right now. So you have to remain patient. Just be patient in wanting to buy your favorite names. What I would say, always look at history, right? Look at the 2000 tech bubble burst. Many stocks went down 70 to 90%. And we're seeing that right now with growth, but a lot of them are still at 50. And so you can't just blindly buy the dip on names that you feel like, they might go up, because they could just continue to dip. So just be careful buying the dip. SYF. Oh, Alfonso, you're looking for downside on both. Gotcha. Yeah, this is another one. This is a daily chart. So it looks like it might have room down to 27.58. That's where I would say you probably would see a more substantial bounce. And from a fib level, let's see where that lines up. Right at the 618. Shocker. Raise your hand if you're shocked. Nobody should be raising their hands. That trend line right there is right on the 618. That's very likely going to act as a magnet. And then once you get there, it bounces. I apologize. I missed the downside on both. So for CCL, I would say wait for a retracement back to the 21 EMA. Right now, you're very extended off of it. I'll shut off all the other EMAs so you can see. This acts as a magnet, right? You see how you're a little extended here, it snaps right back, a little extended here, it snaps right back. We're very extended here. I would not be going short CCL. I would wait for it to come back into that 21 and either get rejected off of it or break above it and then come back down through it. You're also very, you're in oversold territory and you already had a squeeze that fired to the downside. So I wouldn't be shorting it here. You could watch for a hold under 1246. That's where I would keep my stop loss. If you are shorting it here, make sure you're stopping out over 1246. WWE. Oh yeah, I talked about WWE on the weekend review last week. I really like this setup. In fact, it is making a W right here. Let's see if we can find an E somewhere. Yeah, beautiful move right through the trend line, right through 62.19, right through 63.72. I think 66.56 and 70.75 are going to be your next targets. You can see we broke out on RSI here just last week and squeeze fired to the downside, but shifted right back up. So this is looking pretty good. So Al's asking, no questions, just wanted to hear my views on broader market, value perspective. Appreciate that, Al. Yeah, I'll do a little wrap up at the end. So Alfonso's asking, what are my thoughts on strategy? I know I use Fib and Elliott Wave. Yeah, I think, listen, strategy, right? That's what it stands for. I use the strat, but I don't say I use the strat. I use some of the strat principles, the inside day, the outside days. I just use the principles. Listen, it doesn't matter what strategy you use, as long as you, number one, you know how to use it, and two, it works for you. If you know how to use it and it doesn't work for you, it might not be the right strategy. And I feel like young traders, you should try out different strategies earlier in your career, in your first 2 years. What I don't want you to do is what's called system hop. You don't want to try the strat 1 month and try Fibs and Elliott Wave another month and try, Ichimoku clouds the next month, because then you're not really giving yourself the proper, testing to see if it's working for you. You've got to master the strategy first and figure out if that strategy works for you. Now, here's the rub. Not all strategies work all the time, right? Some people will tell you, oh, my strategy works for everything. No, not all strategies work for everything. Not all strategies work in all types of markets, right? If you're a trend follower, you're screwed, because trend following trading right now, basically it's swing trading on a longer time frame. It doesn't work right now. You can't swing trade in this market. It's really, really difficult. So you either have to sit in your hands or educate yourself on how to trade a different strategy in terms of what the market is bearing. I mean, that's what you got to do. I would tell you, even day traders are struggling in this market because the intraday volatility it's just bananas. It's straight bonkers. I'm even like, some days I'm just like, wow, it's like a kangaroo market. It's not a bear market. It's not a bull market. It's a kangaroo market. It's just hopping all over the place. If you look at SPY and the Qs on an intraday basis, let's just pull up SPY real quick and go down to let's go to a 15-minute chart. I mean, who could trade this, right? It's like, it's crazy. You're up, you're down, you're up, you're down. You gap up, you push down, you finish higher, you close higher. I mean, it's straight bonkers. I mean, it's really, really difficult. And yeah, it looks like we're forming a bottoming pattern here, but I think it's a bottom. I really just don't think it's the bottom. All right. I digress. SoFi. Let's take a quick look. It's another stock that's just destroyed. Let's go up to the weekly chart. Came down to 1618 extension, wick down to that 1272 extension to the downside from the IPO low to the all-time high. This was from the prior swing right here, 618. Let's go to 200% extension as well. That's $2. You don't want to see that. Let's turn that off. That's scary. Yeah, I mean, this is tough. This can retrace back up to $10. I think it's got to get back over this IPO low. I think that's the line in the sand. I think if you get back over 10, 20, give or take, that level right there, I think maybe you got a shot, but man, it's still a new company. So it's difficult to say where this could be in a month, 5 months, 5 years. So difficult. Very tough market for growth, for newer IPOs. Ray is asking, what is your number one trade that you wake up to and get excited? Oh, great question. It's always going to be Tesla. I love trading Tesla. I not to say that I trade Tesla every day, but it's the one that I've traded the most. So therefore, I'm most comfortable trading. I'm most comfortable with the personality of the stock. It's wild. I took 2 trades on it this morning and made some money, 2 day trades, but it's also, it acts very normal to the way it trades. I don't know. I've been calling this target zone here for about 2 months, and we're inching our way through to 550. So yeah, I mean, that's probably one of the ones that I wake up and I say, what's Tesla doing today? It's probably the first, because it's just such a wild stock. So let's take a look at coin. Another stock just destroyed. Came into that 200% extension, 47.44. We're trying to base here, but I don't know. It's just, we're so far extended too. A lot of these names are very extended off of their 21 moving averages, the EMAs on the daily chart. Like I said before, that's what you should keep on all your charts, is that 21 EMA. For me, that's like the guidepost for my trades, in terms of pullback entries, in terms of breakouts. 21 is super important for me, for my trading strategy. But yeah, I don't know. I don't see anything good. I think you have to see Bitcoin making a bigger play to the upside before you see any of these. This looks like the Coinbase chart, right? It trades with it, right? Bear flag breakdown. A lot of people feel like we're coming back to 20,000. We might. If we start to bounce off of 20,000, that's where I would start to get interested in the Coinbases and the Maras of the world, the MSTRs. So Fernando, this is TrendSpider. It is a fantastic product. I would say the 2 best trading platforms out there are TradingView and TrendSpider. I've tried them all. I've tried stock charts. I've tried TradingView, obviously using TrendSpider. TrendSpider speaks to me more than the other ones. I just feel like it's a great platform. It's an easy platform to learn. I'll drop a link in the chart down below. It's past all of that, their customer support and their training support are phenomenal. I mean, the first 6 months of using TrendSpider, I was like in touch with them every other day, and they answered all my questions. They jumped on one-on-one sessions with me. Like I said, their customer support is very responsive. There's not much bad I can say about the company. They're really great, very, very accessible people, and they're traders. So they're building a platform, it's a platform by traders for traders. So yeah, don't get me started talking about that, because I'll talk about them all night. All right, so let's go on to the next TTD. I had hopes and dreams for TTD. It broke my heart. So we lost our wedge, our falling wedge here. We're trying to get back in, gap down Trying to get back into that. Might have a gap play to the upside here. Turn on my gap snake on TrendSpider. You can see got that gap right above that we just started to push into today. So yeah, you might see a little bit of a trade up to about $49, $50, but I don't see anything great yet with tech stocks. Not yet. Trust me when I say I will be the first one to scream from the mountains when tech is ready. It's not ready yet. Okay. Snap. Yeah. So Snap, it's funny. I had Snap on my list to go over today, but I'm like, man, the chart is still really broken. So I started to chart it out and then I just left it off to go over, but glad you brought it up because, all right, so we had a nice inside day today off that earnings that they got absolutely hammered. Here are the levels that I see to the upside. I think 16 would be my next target, then 18, then 1976, then 2150 to close the gap. It's very extended off its 21. So I do expect one of two things to happen. Either sideways consolidation or just a reflex move back up to the upside. Still not great, to own long-term. So hard to say where they fit into the social media ecosystem. They're very much a generational play in terms of who's using it. I don't know anything about their business fundamentally in terms of how they might make money outside of advertising. I know they're doing like AR type stuff and probably will push into VR. That would probably be the play that would make the most sense, but from a metaverse standpoint, but I still feel like that's like 5-7 years off. So hard to say where Snap is a year from now. Thoughts on LLCs for traders? Obviously I'm not a financial advisor and I'm certainly not an accountant. I would touch base with an accountant that is versed in trading. Very important. They'll be better to advise you. I know there's advantages to having an LLC and all that jazz, but yeah. The other thing I would say, if you are a frequent trader, make sure to ask your accountant about, there's an exemption that you could file if you're a US citizen for a frequent trader. So just don't ask me what it is. I don't know. I just ask my accountant to do whatever he has to do. So just make sure you have a good accountant if you are trading frequently. Yeah, LTHM looks pretty good too. Should have put that on my list. So we have not broken out yet, but I do see a move over 29.30 up to 32.04, 35.54, and 39.96. This one looks pretty good. Definitely have been watching a beautiful wedge breakout here. So keep a close eye on LTHM. All right, we are just past the top of the hour. Does anybody else have any questions, comments, chart requests? Happy to go for another few minutes. My pleasure, Matthew. My pleasure, Rena. All right, well, let's wrap it up. Let's see, what can I say? This is like my second bear market. I can't say that I am the best trader in this environment, but what I'm really good at is finding the relative strength in the market. And that's what I do every day. I try and find one or two setups that look the absolute best that given day. So, for those of you who are not, with me, that's basically my job. My job is to find the relative strength in the market. I send out my morning emails and, and I teach you in the university how to manage these trades, whether, using stop losses, using trailing stops, using ATR trailing stops. This is a tradable market, but it's not easy. And you need to have discipline and patience. You can't rush into trades. You can't FOMO into trades. You can't chase trades that have broken out and you missed it. You have to exercise patience. But keep in mind that, bear markets on average last 9 months. So let's just say we're in 2 to 3 months. So maybe we have another 6 months of this, maybe. On the other side of this, trading is going to get much, much easier. On top of that, whatever is showing relative strength in this market is generally going to do really well when the bear market is over. And so just keep your patience there, stick with it. We're going to all get through this together. And like I said, the grass is definitely going to look much, much greener on the other side of this. So I appreciate all of you that have tuned in live with me. And certainly for those of you who are watching the recording, I do appreciate your time. As I mentioned before, I do have a university where I have 20 hours worth of education, top 10 long-term conviction charts. I do chart requests, my trend spider scans and watch lists, my trading rules and documents. I do these office hours every 2 weeks. I do at least 2 videos a week, usually, always a weekend video and usually like a midweek review video. I've done some chart breakdowns lately that I think, I've gotten a lot of good feedback on. So I'll try and do more of those. And like I said, the most important thing is every morning I'm sending out an email, giving you a little bit of what's going on in the market, any big news events, what's the economic calendar look like for that day? Like today was FOMC. So it's really important to know these things when you're trading. And certainly if there's any earnings going on for that day. So that's it. It's a wrap. And we've got another office hours in the books. I don't know what number this is, but I do appreciate everybody that's come out, like I said. Make sure to follow me on all my social medias. I'm trying to put out as much good free content as possible, but certainly I do have to hold back some of my premium content for my paying members. So it's not that much. It works out to be like $1 a day. Trust me, you will make that money back tenfold if you come with me, and you'll get a great education. And maybe I'll entertain you a little bit as well. So I appreciate everybody that stuck with me. Thank you so much. We will get through this together. As I said, have a really good rest of your evening and rest of your week. And I will catch you in the markets tomorrow. Take care, everyone.